In the meantime, there's also a decent move on Hero MotoCorp. Their monthly sales data definitely was better than what the rest of the pack actually reported. There's IGL, MGL, both those stocks as well, holding up very smartly. Idea in the red, Dixon, NMDC, Nalco, Hindustan Copper. So today perhaps is one of those days where metals are the ones which are a bit of a drag, as are select autos as well. Tata Motors continues to react to the weakness in its CV business particularly, and M&M, which is also down about 1%. The monthly sales data there, of course, is awaited. But let's try and understand what the full year outlook is from Amber Enterprises, what the synergies from the Korean JV in railways is going to bring on the table, and how business at large has been. Jasbir Singh, the chairman and chief executive at Amber Enterprises, on the show right now. Jasbir, hi, morning. Good to have you on the show. The RAC industry reported a very strong growth all throughout the first quarter. Tell us how your current inventory levels are, what is the order book that you're currently sitting on, and how is it that you see overall momentum either gathering pace or sustaining at the Q1 levels?
Good morning. Thank you for having me on the show. You rightly said that it was a very, very strong quarter one, which industry saw after a couple of years. Inventory levels actually are very, very normal now. Since it was a very huge quarter from the sales point of view and from the demand point of view, inventories are at a bare minimum level at this point of time. We saw a lot of shortages during the quarter one, but now those shortages are over. So we expect that looking at the current inventory level, we think quarter three and quarter four also should be very positive year for the industry. Overall, we are very positive, optimistic outlook for the industry as well as for the future quarters to come.
I just want to understand that our understanding of your business is that you essentially are more like a assembler or a manufacturing company, which in a sense is making products for big brands. Those big brands, they commission you and you are essentially making their products. So where does the inventory cycle work for you? Because if you are working on what really could be called as orders, and if you're manufacturing on behalf of a large company, does the inventory cycle impact you?
Yeah, so basically we give a solution, end-to-end solution from design stage to mass production. And we are the largest backward integrated player, manufacturing almost about 70% of the components what goes into an air conditioner. So we have two types of businesses. One is to give the full products as demanded by the customers. And second is to supply components for the companies which are manufacturing air conditioners in their factories. As far as the demand cycle goes on the inventory cycle moves, so if we are talking today in September, from November onwards, there will be inventory built up in the system and we will start producing our finished products, which will be supplied to the brands, and then brands will further supply to the retail. So that's how we move in the cycle. Whereas on the component supply side, our inventory cycle moves in a way where when the manufacturing plant of brand is manufacturing, we have to supply just in time for them. So these are two different cycles on which we operate at.
How will things change for Amber after the implementations of the PLI scheme? Because our understanding is that you are one of the largest beneficiaries because of it.
It's already been a very positive PLI for the entire sector. If you see the objective of government was that the local value addition should move from 25% to 75% in 5 years. And in very first 2 years, we have seen this value addition going up to 50%. And Amber has definitely benefited because we applied from electronics component point of view as well as other components which we supply to the brands. And we have expanded our manufacturing footprint in the South India also to cater to the PLI. So it's been a very positive, I think, step by Government of India to create a local component ecosystem for our sector.
The other thing I also wanted to talk about is the JV with the Korean player. Help us understand, what does it really bring on the table? When is it that you're going to commence commercial operations with the tie-up?
That's JV we have done in the railway division. So we have right now 3 divisions. One is consumer durable division, second is electronics, and third is the railway and mobility. In railway, we have done a joint venture with Eugene Machinery for different rolling stock subsystems like gears and couplers and pantograph. It's a brownfield expansion which we are doing. The company has been set up, and now we have already started ordering the machines. The factory is coming up in Faridabad in Haryana. We expect this plant to be up and running by Q1, and next 2 quarters, that means Q3 of next year and Q2, will be approval cycle from the rolling stock companies as well as the railway ministry. After that, we will start supplying. So Q4 of next financial year is when we expect the revenue coming out of this new joint venture as far as railway joint venture is concerned. If I talk about the another MOU which we have done with Korean Circuit for the electronic circuit, that there we are just mulling over the location where we need to bring in the HDI boards and the semiconductor substrates, and we are also waiting for government's incentives to be announced on the electronic components, and after that we will let the markets know as soon as the our plan becomes concrete.
But you are moving into areas, let's say railways. These are pockets which are dominated by government spending. Be it this is a competitive market, and this is where margins are very, very competitive. I mean, they hardly go about 12-13%. What happens to your capital allocation policy if you're moving into an area which is highly competitive?
Actually, if you see our journey, we moved into adjacencies and then we are scaling up those adjacencies. In 2019, we acquired Sidwal, which is our railway division. It was a small company at that time. It has already grown 3.5x in last 4 years. But we were only supplying air conditioners till now for railway application and for metro applications. So to deep dive into the passenger car business, we studied very carefully the bill of material of the passenger car, one coach. And then we started moving ahead for the solutions, like we started doors and gangways. And then we created our own pantry systems. Now we have done this joint venture. So from almost about 22 to 23 lakhs product, we have moved to 1.2 crore per car. And you all know about the addressable market of this. But to answer your question on the margins front, these all products which I'm talking of are basically either supplied by multinational companies or they are imported into the India. So this is an import substitution play, and these are all safety related products. So we'll be able to maintain the margins. If you compare the balance sheets of the peer, they work in the range of 18 to 20% EBITDA. So we are currently at 22% EBITDA in this division, and I expect 18 to 20% moving forward should not be a problem.
Okay. Let's now look at the split which you've been indicating, that you eventually are working towards a 50-50 split, 50% coming from non-air conditioning revenue, 50% coming from air conditioning revenue. When will that happen? And by the time that really happens at a top line level, at a consolidated level, when will the margin picture start changing because of this?
So margins has already started moving, upwards, and we have seen because of our shift in our strategy on the component side, there has been positivity on the margins, as well as our electronics division is already moved from 3% EBITDA margins to close to about 7.5%, and we are expecting that we should close this year in the range of 7.75 to 8% in the electronics division. Railway division is already sitting at 20% plus EBITDA margins. So overall, if we see, looking from consolidated point of view on the three divisions itself, there's a good movement which already on the margins has happened, and we expect that further there should be a movement in next 2 years, slightly upwards towards the double-digit numbers as we move ahead, because of the consolidated mix of the products of all the three divisions.
So much for taking time out and joining in. Appreciate your time. Good to have you on board. All right, let's get